Hey guys, welcome back to another week of Mortgage Matters in Minutes, sponsored by Mortgage Specialists. And again, we're here today to provide education, hopefully some information for those of you out there that are interested in purchasing a home, refinancing a home, or you just have some general home financing questions. So this week's topic is how to finance a new home as a current homeowner. And this is probably the most common asked question these last 2 to 5 years, being in such a crazy market that we're in, stating people come to us stating that, hey, I'd like to buy a house or I want to buy a house and I have a house to sell. I know it'll sell super fast, but I want to be able to use the equity in that home to be able to put as a down payment on a new house. And we get that question very often. And it's not complicated, but it's not as easy as people would make it out to be. Because what all of us as mortgage lenders have to go by are mortgage rules that are out there. And the rules have established that a borrower, anytime they're purchasing a home, needs to qualify with a certain amount of income, credit, and assets to qualify for that loan. So when you have a current home and you're looking to purchase another home, obviously we have to be concerned with, do you have a payment with that home or do you not? So the first question that we ask is, let's see if we can qualify with you buying a new home before you have to sell your old home. Why are we concerned about that? Because in this market generally right now, contingencies aren't generally being accepted, meaning I want to buy your house, but I have a house to sell. Wait for me to sell mine once I buy your home. And most sellers are saying, no, we don't have to go through and do that because we have plenty of buyers that are interested in buying our home. So what we look at as lenders is a couple different things. We do look at bridge loans. That's always the common word people will call and ask us about is bridge loans. And bridge loans do work. A little bit about bridge loans, the simple term is all they are is a second mortgage against your house. Generally, lenders are only going to borrow up to about 80%, maybe 90% of your home's value. So again, a bridge loan is not going to solve all of your problems, allowing you to roll in all of the equity in your house, but it will allow you to get some. The negative behind a bridge loan is we have to qualify you with your current house payment, the bridge loan house payment, and the new house payment. So you have three mortgages we have to make sure that you can afford with the amount of income that you make. So a lot of times if a bridge loan doesn't work, we look at doing qualifications or a pre-approval based upon you purchasing a home without the sale of your current house. And I would tell you many of our clients are doing that right now. I'd say, gosh, a lot of clients, more than half of our clients probably are looking at purchasing without selling their home first. Just because it makes it a little bit easier, less stressful than moving twice and going through all of that work as well. So what do we do then if we haven't sold our home and we then a month later do sell our home and receive the equity from our house? So the answer most of the times for our clients is doing a recast. And a lot of people hear the word re first and assume that after closing is up, you have to refinance the mortgage that you're in to put a larger down payment down. And that's not always the case. On conventional loans with Fannie Mae and Freddie Mac, you can do a recast, which basically allows you one time throughout the life of the loan to make a large principal payment to lower your balance from a higher number to a lower number, and they'll readjust your payment. So on a recast allows us very often to be able to get people the new home that they are looking for while also being able to have that payment at the end of the progress of the home selling to what they want. So let me give you an example to wrap this up in summary. Most of the time, people can qualify with two house payments. Sometimes three house payments is a little too much, but we see if they can qualify for two homes. And I know that's not people's dream, but that's what the market entails right now. So if we are able to get you qualified for two homes, we then advise usually to do a recast, as it's usually a little bit cheaper and easier to buy the first home or the new home with a minimum down payment or 5% down that you might be able to pull from your savings or retirement account. Then after your house sells, you take that large amount of money, apply it towards the principal of the loan by contacting the lender, filling out a couple forms, and they lower your payment by that large principal reduction. So again, you can always look at being qualified to purchase another home when you have a home to currently sell. There just has to be ways that we consider and look at the scenario to make sure that you qualify and not to get any kind of problems where maybe you have purchased a home and now something happens with the house that you can't sell it, or vice versa. You sell your home and you cannot become pre-approved or pre-qualified. So hopefully today that helps answer a few questions on how to finance a new home loan without your current home being sold. There's bridge loans is a very common terminology. Much of the time we do recasting. It's just a little simpler, easier to qualify for most lenders. So thank you guys for all your time. We'd love to chat with any of you day, nights, or weekends. You can check us out on our website at mtg-specialist.com or phone call us at 402-991-5153. We hope you have a great afternoon, and we'll look forward to seeing you guys here next week. Thanks so much. Mortgage Specialists. Driven, trusted, reliable.